Good afternoon and welcome to the FX Daily Wrap Up for with ForexAnalytix. And we're just going to briefly touch base on ahead of the FOMC. I already covered this in depth on the European crossover webinar. If you follow us on, or if you would member with ForexAnalytix, that is done live at 4 a.m. Eastern. That is recorded and presented in the chat room about an hour and a half before the New York Open. And then ForexAnalytix does make that same video available about 9:30 Central Standard Time, maybe 10 Central Standard Time. And then I was on Face webinar, spent about 20 or 25 minutes on that. So we've already touched base. I've already laid out the groundwork on that. So by now you would have been able to see the reboot or recording of the European crossover webinar. So I'm not going to go into in depth on that because all that stuff has already been covered. What I'll just focus in is on a couple of levels as we get ready for the FOMC. The market's pricing in a 25 basis point cut. I think that if we see that, and I did mention that, I think that we see 25 basis point that we'll gun the stops here. And we were much lower this morning. I think we're around 98. So maybe even a little bit lower. No, I guess not. So I think that they will gun the stops if we see 98, 25 basis point cut announced. The one thing we'd be flying home is if it did a 50, and that would really throw the market, wouldn't even know what to do with it to a certain extent. I mean, I'm saying the market wouldn't know what to do with that initially. We'd see a big run up in equities, but then the concern would be, what does the Fed know that we don't know? But here's a 98.37. I think we could easily gun those stops. Anybody short's going to have their stops just above that. And the key level above that we're looking at with our bias chart resistance is 98.71. I think that that's where they can potentially get to once if they do gun those stops. But the market will be looking at what the accompanying text is, as well as what Powell says. And just to touch on it briefly, certainly with the developments that we've seen, continued slow growth globally, I'm sure Powell will mention that, and he has mentioned it briefly before. The difference is going to be whether he pays lip service to a certain extent, the way the market may interpret it, or he leans more about the concerns for global growth and the potential impact to the U.S. economy. If he does that, I don't think he's laying the groundwork for future cuts, but he will be opening the door for future cuts. And at that point, the market will go and interpret, say, you know what, this isn't a one and done. This is going to be another rate cut, the next one, and then another one before the end of the year, because nothing's changed on these global economies. They just keep getting weaker and weaker. So I think the 25 basis point cut would blow doors on the 98.37, and then we see what the market does up here. And I don't think that there has to be any rush, because once again, let the market do the work. Powell will let you know once we get that what his intentions are, what they're looking at, and I've laid the groundwork as to what I believe the market will focus in on. Then you can let the market adjust for that, because if people get stopped out and then when the market starts to disappoint, then the market will start to pare back, and then those that were stopped out probably want to jump back in, and those that want to short may step in with a tighter with a tight stop. So we're looking at 98.71 on the upside. If we keep on going for the day, then I'm looking for 99.18 for a pit stop before we eventually potentially get up to par. I think Blake mentioned that himself, and he sees the market potentially going there. One big development, you can see here that the euro is weakening. And really, that's on the backdrop of what's happening here. What has been going on for weeks has been the Bund. If you remember when the euro tried to make its advance, and we had a nice little advance, it's the Bund that really, took the air out of the balloon on this. And you're seeing now the Bund. Now, this was what happened on ECB day. Okay, this is here on ECB day, and this was actually before the announcement. This was actually happening. This actually surpassed the ECB's rates. So it went to minus 50 on the Bund yields. So now we've even taken that out. So I've mentioned it multiple times. If the Bund's making lows, that works as a ball and chain on the euro. So even if the dollar, to a certain extent, let's say Powell's rather dovish, he's not so much dovish. I don't think he has to be dovish. It's just that he opens the door for those potential cuts further on, and not by paying lip service, but if he focuses more on the potential for those risks. I'm sure he's going to mention China, probably going to mention the UK. We know that this cable has just fallen, like I said in the face webinar. It reminds me of Texas sands falling like a turd in a well. And certainly those are all going to have impacts. And so, but if he belabors that point, that's where I think the market would say, wait a minute, there's more cuts coming down the road. I think we will slide, and it will open the door for the next week and then the next 2 months. But that being said, tough row to hoe if you got the euro going lower, and it can't help but go lower when you got the bunds rallying to new lows in yield rates, obviously new highs in price. So that's my take on that. We're looking at 1079 on the downside with 1052. Potentially we can eventually just go down to 10, but I'm saying when we blow doors here, but that would be the key. Let the Fed, let Powell and the accompanying text let you know. You do not have to rush into this. Also, if we do get that, we can see this dollar yen pop up. We had 891 before. A few days ago as our resistance. We got to 895 and back down. Then we tested it again, and the dollar yen is actually holding up pretty well in light of what's happening in some of the bourses across the globe. So you can kind of look at. We've already fallen so much, so you can kind of look at 891 again, although, we're looking potentially the stretch being the old pivot, which is 927. So things get a little bit carried away initially. But that's the take on that. Let me go on and move into the cross rates. Like I said, all this was reviewed ad nauseum in the not only in the European crossover webinar, which is made available to the public probably about an hour and a half ago or an hour ago, and also is on Face. So we don't want to go into the same old thing all over again after we've gone and covered that. But one of the things I want to focus on here was you can see how gold has slid down. And once again, my thoughts were, this dollar is going to move higher because the only fly in the ointment that's going to do it is if you saw a 50 basis point cut. Then that throws everything out the window. And so my thought being, and once again, you lay out a scenario, doesn't mean that's necessarily going to happen. I'm not a soothsayer, and lots of times for all of us who try to predict where we think it's going to happen with the FOMC, get mud put in our face. So my point was that I thought the dollar, and I mentioned this in the webinar and Face also, that I had a discussion with one of the guys in the Asian session in the chat room, and he was asking, I said, hey, look, we're not that far away from 98.37. At the time in Asia, we were at 98.02, I think, or 98.04. And I said, look, we're just, all they have to do is cut the 25 basis point, and they go after that 98.37 and those stops right there and above it. So that's what I think. And so as we came in this morning, the dollar was weaker, but we started to see things turn around, and henceforth you've seen the gold come off. And this is interesting because gold usually, reacts or has been reacting very positively for what we've seen in the interest rate environment. But at least for now, gold is playing to what's happening with the dollar. And once again, just like we talked about it earlier about the dollar, gold's just getting out of the way. Now, if we get lower rates, that's going to be beneficial for gold. But gold's just saying, gold's just stepping out of the way and say, hey, look, we'll just go and drop back down, and then we can always recover right back. So once again, that's what's happening there. We have seen some rebound moves here in the guppy after we'd hit. You can see here also in the sterling versus the odd, we covered that. We reached the 78%. We had that as a bias chart support yesterday. One moment. And this came down to the pip, which also confluenced with a level that we had here. And you can see here, we're just trying to go with the touches where we see the most touches in here. Generally, we try to go with the bodies, but as long as we have touches coming across here, so that in coordination with the bias chart, the fib, 78%. We know sterling loves the 78%. We've seen, a bit of a rebound here. I think today is actually, this, and I'll go back to, because this is Fed day, so we're not focused that much on cross rates. To me, the real hiccup, and and I was mentioned to Pedro in the chat room. To me, this presents a very interesting dynamic to what the FOMC day was, which I did not see coming out, which was look at the bunds, new highs, new low yields, even below the ECB rate. So this is just, wow. That presents an interesting dynamic because potentially we could have seen the dollar weaken. just and not sell off. I mentioned this in the face, not sell off by gangbusters, just weaken, and and see some follow through on that weakening. But we know, as I've said to a certain extent ad nauseum, is the euro compromises 56.4% of the cash dollar index. So if the euro's got this ball and chain attached to it, i.e. the bunds, how the heck is the euro supposed to rally? I mean, if it does rally, it's probably going to be a rather brief rally. So what we were looking at here in the bias chart was the old, well, actually, yeah, here we go, 1185. And then, of course, we got past that 1224. Well, that getting past that 1185 might be one tough row to hoe in light of what's happening with the bunds, which has also brought the euro down here. And look at the dollar index. We're just 17 ticks away from outright new highs. So what do you think they're going to do when they see that print? If they see that print, 25 basis point cut, they're just going to go and try and gun for those stops. So that's what we were talking about this morning. We thought that could go and happen is that they'll gun those stops, and then we rally up, and then we see what happens, and based on what Powell says. So that's my take here. I've already pretty much laid it out. We've seen the dollar CAD come back with a rip-roaring vengeance after coming down here. We got all the way down to, 3105. We actually had our bias chart support at 3120. And we've come back with a vengeance here. Look at this. Boy, what rally is that? Boy, look at that. 50 pips already we've rallied. So no one is standing in the way of the dollar. One of the guys in the chat room was saying, boy, I don't understand what's going to go on. And I said, look, I think that's what they're going to do is they're just going to go on and go with, they see that 25 basis point print, it's going to be like a dog whistle. Man, boom, go for those stops. And then once we get past there, then we'll see what happens. And we'll just see what Powell says. I think that there's no rush. The interesting dynamic, as I mentioned, has got to be with the euro because of what's happened with the bunds. Everything else, like I said, with the dollar yen, we'll see at 891 and 927 the pivot. And that's all we have here. Good luck with everyone with the upcoming FOMC. Have a great day.